Good afternoon and welcome to the Coinbase Institutional Markets Call. My name is Ben Floyd and I look after the Coinbase Execution Services desk here at Coinbase. In the last couple of calls, we've been incredibly focused on the ETF. So I'm excited to spend some time thinking about what's going on in Web3 for a change. This week we have the fantastic Arianna Simpson from a16z's joining us, who's going to take us through some of the things that she's focusing on in the Web3 area. That's everything from gaming to how to engage with Web3 when you're eating out with your friends. But before we get into that, the market has had a bit of a comeback in the last week, so we want to cover that with George. And it's also great to have David back with us after his ski trip to Switzerland. So David, how was Davos? Did you manage to get any skiing in?
I got zero skiing in, and thanks for framing it that way. Davos was great. A bit surreal because, it's a 3,000 person town that has 30,000 people descending on it. So we're all fighting for the same sandwiches at the local deli. But yeah, it was a great trip.
Nice. And how was, I guess, the feeling with regards to crypto? Was it even a topic of conversation? Like, how did that feel in general?
So admittedly, on the tech side of things, I think things were more focused on AI. Definitely feels like we're kind of getting to the peak of the Gartner hype cycle there. I think that it feels like people are a little bit over-indexed on the AI front, but crypto definitely still was on the promenade. You saw some big names over there, and I think it was a more serious discussion, which is really nice to have. Obviously the spot Bitcoin ETF helped, but also a lot of talk about tokenization.
Very good. Yeah, I feel like timing-wise, having the ETF was very good timing to kind of highlight that things are moving forward in a regulated way, where a lot of people at Davos are probably more understanding of kind of an ETF structure, for example.
Yeah, that's right. Exactly.
Very cool. Well, looking forward to hearing more about that later. Some quick housekeeping. Please like and subscribe so that others can find this show. And if you are watching on YouTube, scan the QR code. If you're listening on Spotify, please click the link to access all of David and team's fantastic research, all free of charge. Now, let's get straight to it. George, let's go through the markets. What's been happening the last week?
Yeah, thanks, Ben. It's definitely been a super eventful week. So from a price section point of view, it's more or less a continuation of the sell the news narrative post-ETF. Big picture, obviously, without a doubt, the ETF launch itself has been a huge success, whichever way you look at it, I think. And looking at the numbers, if you look at the new ETF products cumulatively, we have seen about $4.55 billion of inflows so far. And interestingly, actually, the old product, BITO, the Bitcoin Futures ETF, has also seen about $205 million of inflows year to date. So pretty strong on the inflow side. Now, on the outflow side, we have GBTC. So GBTC, obviously, with the slightly higher fee at 1.5%, has seen outflows of roughly $3.45 billion so far. And what you have to consider is that FTX has been roughly $1 billion out of that. But I think that last aspect of the GBTC outflows is essentially, what everyone is focusing on. And it's a bit like this Damocles sword hanging over the market to some extent, causing this price action and negative reflexivity, if you want. And it does give that impression maybe that, the new money inflows aren't perhaps as large as was expected to be by the market in the very short term. But again, I think what you have to focus on is the very longer term here. So if you look at the breakdown, let's say on Monday, the 22nd, yesterday, the GBTC outflows have actually accelerated to $640 million. So overall, we had net negative, so $76 million of outflows across the new products. So that is definitely worrying the market somewhat. And I think, that should get priced in relatively soon. But outside of that, I think there's a couple of other things that have shaped the price action. I think number one is leverage. Obviously, in anticipation of the ETF, there's been a lot of leverage coming into the system. If you look at things like Solana, for instance, open interest is down 40% now over the last couple of weeks. So that's been coming out. And I think the other contributing factor is a break in market structure to some extent, with BTC going below a couple of key levels and testing the 100-day moving average now as well. The last thing I would watch is Euro-dollar futures curve. We have been pricing about 180 basis points of cuts about 3 weeks ago until January 2025 in the US. Now we're pricing about 150 basis points after slightly higher inflation and more hawkish rhetoric from the Fed. So I think that also can have an impact.
Yeah, that feels totally fair. Just going to go back to the ETF and some of the price action, is it fair to say that a lot of the, I mean, so when the ETFs were kind of announced, or rather it became very clear that we had high certainty of getting an approval, Bitcoin was trading in the sort of the low 30s. So we had a huge move up. So is it fair to say we're just kind of giving back a lot of that move? And to your point, like a lot of the leverage that was there, the basis was there, it's kind of come out of the system right now. So I guess how much further do you think we may potentially have weakness, or is it kind of a broader macro question?
I think it's a combination of all of these factors. I definitely do think that, the market got too excited. I mean, as often happens, right? Like with these very big events in crypto. So I think I would probably look at a couple of the key technical levels here, right? Like we have 38K, 38.5K is this key level. I think if the market doesn't manage to hold on to that one, then sure, there's probably some probability that we might see the mid to low 30s again, if the broader market, let's say risk assets, doesn't do too well either. So there definitely is that distinct possibility. But I think on the other hand, if we see GBDC outflow slow down a bit and the market stabilize from that front, right, I think we could start picking up again relatively quickly as well.
Very cool. Well, thank you for that update there, George. What else is happening outside of the majors?
Yes, on the altcoins, price action obviously as well has been rather weak, which shouldn't be a surprise given the very strong rallies we have seen in recent months. And we have products like Render or CHZ, for instance, which held up really well, considering the broader market down only 5 and 7% over the last week. And then there's others again like Say and ARP, which had super strong performance over the last month or two that took a bit more of a beating, down around 25% over the last 7 days. But I think in the end, price action is one thing, but obviously from an on-chain perspective, activity is super strong. So this could be just one of these great opportunities to accumulate higher quality projects for the longer term.
Yeah, that makes a ton of sense. I feel like that's a perfect segue to carry on with Arianna and talk about Web3. So George, thank you very much for that. Arianna, welcome to the call. Great to have you here.
Thanks for having me. Very excited to be here.
So you are a real crypto OG. You're 4 years at A16, but prior to that, you founded your own fund, Autonomous, which is still going. And then before that, I learned today, which is quite fun, you were at BitGo, which
yes.
In 2015, there weren't many people around in 2015, that's for sure.
No, this is actually we're going into my 11th year in the space, which is really crazy. You can definitely see some additional wrinkles courtesy of the markets, but we're still here and still enjoying it. So can't complain.
Yeah, I think yeah, being here after 11 years is there should be certainly NFTs that are worth a decent amount for that, for sure.
A gold badge, yes.
Exactly. So how did you get to space? What was you were at Meta, I believe, before that. Like, what was the reason for moving into crypto?
Yeah, I actually kind of just stumbled into it by accident. I had spent some time traveling around Southern Africa and ended up in Zimbabwe. And once I was there, I saw that they were using US dollars, and later learned that the reason they had switched over to doing so was because they'd had rampant hyperinflation courtesy of the president/dictator Robert Mugabe basically recklessly printing money. And so I was really fascinated and also very much saddened by what I heard of the economic devastation that came as a result of all of that. So when I came back to the US, a friend of mine was telling me that, this wouldn't be possible with Bitcoin because it's deflationary. And I really had no idea what he was talking about. So I started doing some reading and research and kind of fell down the rabbit hole. And here I am 11 years later. So
very, very cool. And you focus on Web3 and some of the kind of consumer adoption at A16. Do you mind just kind of running through what your day-to-day looks like and where you specialize?
Yeah, sure. So, over the years, I've led investments across a lot of different categories, including mostly earlier on some infrastructure and DeFi, but primarily most of what I do today is in the consumer landscape, which I think is lucky for me in the sense that I think we're gearing up for a really exciting next chapter for consumer. I think for a number of years, we really had to work on the infrastructure before we could start thinking about what could be possible at the application layer. And that involved more throughput and scalability. It also involved bringing down transaction costs. So while I don't think we've entirely solved any of those problems, we have certainly made huge strides in that direction, which I think leads us to a very exciting place now where scalable applications, whether that be Web3 games or things like that, that can support usage by millions of users are now possible.
Very cool. So you mentioned some of the infrastructure that needs to be built. I guess we've just had a 18-month to 2-year bear market. It's only a tougher period for the industry. What are some of the things that had been getting built during that period, which now allow us to maybe move at a slightly quicker speed when it comes to consumer products?
Sure. Well, I think some of the most important work has really been in the scalability realm. And so that both means the advent of new layer ones like Aptos and Mistin, among others, the kind of further expansion of some of the existing ones like Ethereum and Solana, and also obviously the continued development of some of the earlier layer twos like Optimism and Arbitrum, as well as the emergence of some of the new ones like Coinbase's Base. And right now, to me, it's not really an either or situation. I think we need all of these to really take off because more competition on that front, or more availability rather of transaction throughput, really just results in lower transaction costs for consumers, which is ultimately a very good thing. So I think that was a lot of the work that we saw happening during the last couple of years. More generally, having been in the space for a long time now, I think one of the things that I've noticed is that these periods where the markets are a bit quieter and it seems like there's less activity are actually really critical periods in which a lot of core infrastructure is being built. And that's very much what we saw. So I think now a lot of the strong consumer teams that kind of entered the space maybe during the last bull run they've been working on games or applications or things like that for the last couple of years. And so, we're very excited about what we see on those fronts, both in terms of internal to our portfolio and outside of it. So I think consumers have a lot of exciting games and applications and miscellaneous launches that they can look forward to in the next couple of years. Very
cool. Yeah, you mentioned people coming into the space and working on things for a number of years. I feel like that's the one metric that I pay such close attention to. Like, you always see good talent come into the space and they just stay, whether they move from role to role, that they don't leave. For me, if I start to see people leaving, then I'm concerned, but you just don't really see that. So I'm curious, with regards to consumer applications 2024, what are some of the ones that you're most excited about, or segments perhaps, if you want to be more high level?
Sure. Well, I've spent a lot of time looking at Web3 games, and I think there's really a very broad array of interesting work being done in that ecosystem. And so I think on the one hand, you have very crypto native games that are what we call fully on-chain games. Those often tend to be built by kind of scrappy teams who are very, very crypto native. They may not have built games in kind of the Web 2 world previously, but are very deep in the weeds of what's possible to build on chain in a fully crypto native way. And those games typically will have not just NFTs or tokens on chain, but they will actually have the game data and logic and be entirely on chain, which presents, I think, a really interesting set of design constraints for those game designers. Again, we're super early in the innings of sort of seeing that category emerge, but there are some really strong teams building in it. So we've been tracking it closely. And then on the opposite end of the spectrum, you have AAA games. In many cases, some of the founders of these kinds of companies are veterans of the Web 2 games world. So they've had a lot of success in building traditional games and realized, though, that the business model of traditional games was a little bit broken. So they said, wow, if we can build a sustainable network and community that's powered by a token and that gives real value back to the players instead of just keeping it for the game maker entirely, we can actually build bigger games, more robust economies, and have kind of a win-win-win situation. So in many cases, those games might be, would have like that super high quality graphics production and be a little bit more polished in terms of, the graphics and just sort of how they're put together, but maybe be a little bit less crypto native in certain aspects. So there's a really broad spectrum of exciting games being built. I think they're very much going to tailor to different kinds of gamers and audiences. But I think it's very likely that we see big successes in each of those areas kind of everywhere in between.
Thanks, Arianna. And this is hugely important because the gaming sector represents something like, I think, $390 billion worth of as a marketplace, and that's the projection they have for the next 5 years. I do kind of worry though, because we've seen kind of models like the play to earn model that was represented by Axie Infinity, which I think served two purposes. On the one hand, it kind of showed us, hey, there's an opportunity here for blockchain to intersect with gaming, but also it showed people hate the play to earn model. And I think the framework that I think gamers would be comfortable with is to not have blockchain in their games at all. At least that seems to be the sentiment expressed by a lot of popular gamers. I mean, how do you take that and kind of fit that into existing models? The new games are being built here. Like, how are we pivoting away from play to earn, and what are we doing to kind of address that?
Yeah, so I actually would push back on the narrative that most gamers are against Web3. We've actually looked at the data and run some studies ourselves. It's actually a very vocal minority that is actually against NFTs and Web3 elements in games. A lot of them still just don't fully understand it or haven't even played a Web3 game. And there's a growing, sort of subculture that is actually very excited about them. I would also say that, we learned a lot, both, in the context of Sky Mavis, which makes Axie Infinity. As a team, I'm on the board, so I'm very involved. But also we saw as an industry that the model can work, but it needed some tweaks. I think the economy just sort of took off a little bit more exuberantly than more exuberantly than anyone, including the team, would have thought. And so we've been in the process for the last few years of really thinking through, like, what are the elements that need to go into developing a balanced economy? Let's not throw away this model entirely. There's actually a lot of good that can come of it, but rather what tweaks do we need to make in order to hone it? And I think it's very rare that you see kind of a new model launch and it's perfect. Oftentimes you have to really go through an iterative process of seeing what works well, what doesn't, and refining it. So I think actually that the play, what was formerly known as play to earn, I think more commonly now discussed as play and earn, is very much here to stay. And so it's really just a question of kind of sanding the edges, refining it, and making some tweaks that will end up making it more sustainable.
Yeah, that makes a ton of sense. I feel like within all of our crypto protocols and projects, like, we're learning as we go. And the first one, you kind of try and you learn some things. I mean, Helium is a great example where they managed to get a huge amount of growth. And then you've seen projects like Hivemapper who have made small iterative changes that I think have allowed for slightly better, more controlled growth after that. I know on the call yesterday, we were talking about applications that our friends that aren't in crypto start asking us about, those things that kind of really cross over and allow people to utilize the benefits of Web3 without even realizing, and stuff that's alive today. Is there anything there that's kind of exciting you that we can maybe go out and try?
Yeah, absolutely. I think one that's top of mind is Blackbird, which I think is in a totally different ecosystem. They're not in the gaming world, but they're building a restaurant network, which I think is super exciting. So the founder, Ben Leventhal, is a veteran entrepreneur and veteran of the restaurant world. He previously started Eater, which was a food and nightlife kind of blog and website in the early 2000s, and then went on to found Resy, which was acquired by American Express a couple years ago. And he's literally the perfect founder for this because he's super deep in the category and has been obsessed with this for a really long time. And he has really been able to see the vision for how a Web3 token-powered network can allow restaurants to improve their margins. It can provide a better experience for consumers as the restaurant is able to have more information about the user, know what your preferences are, know if you're a valuable customer, and really just provide a more tailored experience for each user. And they're off to a really exciting start. So they're adding about 5 to 10 restaurants a week. Right now they're focused on New York City, but they have big expansion plans coming in terms of geographies, and they saw over 200% growth last quarter. So obviously what they're doing is really striking a nerve with consumers. And, I think the network is not necessarily something that you would only or even primarily appreciate if you are already an existing crypto user. Rather, it's about participating in this network and getting benefits as a user that you might not otherwise have, like a better table or a free round of drinks. So, I think that's just one example of this trend that we've been expecting to see for a long time, which is all kinds of different businesses and networks using Web3 rails, even if they're not necessarily Web3 first. And I think that's actually very much a success case. That's what we want to see. I think it's a very much a parallel to the internet, where you have different kinds of businesses that are not necessarily tech businesses, but they're powered by the internet. So I think we're starting to see kind of a new chapter for Web3 in that regard. And I think that's very much a positive.
Yeah, I will say, having spent a little bit of time in technology with hospitality companies, they want to know their client more than anything else, and they want to be able to reward those clients, or customers rather, that are kind of do attend a lot. So yeah, I think there's always been a problem there. So I can definitely see where there may be value there. And for those in New York, it is Restaurant Week this week, so get out there and give it a go if you are in town. But David, when I kind of hand it back to you for a second.
Yeah, I was actually just wondering, what's the second phase of Blackbird and apps like Blackbird? Do you think they're going to start incorporating payments, other means into this?
Yeah, so payments are low-key dropping in the alpha now. I think it's just kind of the natural next step of the evolution, because the more, first of all, the more you're able to do in the app, the stickier it is. And also the better the experience for the consumer, because then they'll be able to know, like, what do you actually enjoy? What kinds of places or even dishes are most relevant to you? So the company has very big plans for 2024. So excited to be able to share more about those in a bit. But
very cool. And so Web3 social is another area that's got a lot of press of late, and it's definitely one where we look at some of the other platforms out there right now, and I think we can all see ways that we can improve them. Is that an area that you're focused on at all?
A little bit. I mean, I would say my partner Sriram Krishnan, whose background is more in Web2 social, he's led a lot of our investments in that category. But there's certainly a lot of overlap with broader consumer, so I touch on it as well.
Hey, thanks, Arianna. So yeah, curious with especially with your mention of, using Web3 rails and then having, consumer-facing apps. Usually, folks think of social as consumer-facing apps, but obviously we have these cool IRL opportunities like Blackbird coming up. What are kind of other IRL social opportunities that you see potentially developing with crypto? Things that you've seen out in the field?
To David's earlier comments about kind of where we are in the AI hype cycle and sort of how that might intersect with crypto, I think we've been seeing some really exciting experiments in the intersections of those two within the music realm. So one of our portfolio companies, Royal, has launched this kind of AI music generation tool, and they've seen a ton of interest in it. It's really cool. I would encourage listeners to go check it out. It's called Sonic, and it basically allows you to AI generate different musical previews, and then you mint a token, and you can use that to upload your song to Spotify, and then you will forever own a percentage of the royalties of that song. So if people listen to it, you will actually earn from it. And I think it's just such an interesting experiment. There's obviously a lot of more work to be done in this category, but starting to combine kind of several of these areas of technology, I think, is where you start to see really interesting things emerge. And that, by the way, has been very much the trend if you look at sort of the history of technology, like social and mobile combined to create a lot of the apps that we know and use daily today. So those trends were not really at odds with each other, but rather, came together really nicely and brought about useful applications for consumers. So I think we're kind of at the early innings of starting to see where that happens. But yeah, I would encourage everyone to go make an AI song and test it out.
Very cool. That's so cool. And you also spoke earlier about infrastructure and what's been built in the bear market. Obviously we have a bunch of L2s now, and also things like account abstraction and chain abstraction rolling out. How do you kind of foresee what a future kind of Web3 app is going to look like moving forward?
Well, I think in some ways it's going to look more similar to a Web2 app. I think one of the big challenges in the space over the last number of years has really been usability, design, creating experiences that feel easy for users, but that still allow for a lot of the benefits of decentralization and tokens under the hood. I think we're definitely trending in that direction. I think the UX is still not perfect, but I'm seeing a lot of consumer applications that have really incredibly slick user experiences, the ability to create wallets in like a few seconds. So I think, for example, Dynamic, another one of our portfolio companies within the authentication space and wallet creation space, has launched some really smooth experiences. And so to me, that's another key area of unlock. If we want to have consumer applications that can appeal to a mass audience that's outside of just crypto native users, then obviously we need to make those experiences really straightforward. So I think that is kind of the next frontier, but we're definitely making good progress in that direction.
Just following up on that, I sort of feel like it'll be a consumer app that really brings crypto to the masses. And when you're kind of looking across the investment universe and you find something like Blackbird or something similar, does it matter to you what chain that consumer app will run on? If it's going to be, Ethereum, Solana, an L2, or one of the new, L1s, or do you is it more the consumer experience that matters?
Yeah, that's a very interesting question. And I think I unfortunately have to use the slightly cop-out answer of it depends, but I'll elaborate a little bit what I mean. I think on the one hand, we've seen that there are really powerful network effects around chains. So one of the reasons why Ethereum has been so successful is, well, on the one hand, composability, right? So the fact that people can build applications and then others can build applications on that without needing specific permissions has been a huge driver. On the other hand, we've seen that as a network starts to get critical mass of libraries and tools and even just developers themselves, then it becomes more appealing for the next developer to build on that chain. The flip side of that is if I am a developer and I go build on, Arianna chain and nobody's ever heard of it, nobody's there's no tools, there's no libraries, then it's going to be very difficult for me to kind of get the momentum, solve the chicken and the egg problem so that I can actually reach a critical mass. Another thing is user portability, right? So if I already have an Ethereum wallet and I want to use a new application on Ethereum, it's generally pretty straightforward. Whereas if I need to use an application that's on a different chain, then I might need to go find a new wallet. I don't know if it's secure. I have to download it. There's just more hoops to hop through. So I would say, if there's a really strong team that's building on a chain that might not be where we would otherwise invest, we would want to sort of double check our own assumptions. Is it what does user growth, what do developer numbers look like on that chain? Are transaction volumes growing? Really just to understand, is it something that we've missed? Is there actually really something interesting happening on this chain? Or is it maybe something that, this developer has a mistaken sense of how much activity is on that chain? So I think, whenever we make an investment decision, there's a number of factors that go into it. And so we would be looking at certainly the metrics of the underlying chain, as well as the metrics of the specific application in question.
So Arianna, we've been talking about a lot of the Web2 analogs, and I think they're so important because as a first instance, this is what people understand. They understand social media, they understand like restaurants and all this kind of stuff. What do you think about the outlook for like more crypto-specific use cases like decentralized physical infrastructure, like DePIN, decentralized identity? Like, do you think we're, too early on this stage, or we're just like hitting it at the right time?
Yeah, we spend a lot of time looking at all of these areas. I think, from my perspective, the identity question in particular has had a really hard time being solved so far, because you need to have some sort of incentive to get users to want to use a given identity verification network. And so it's a pretty difficult thing to do unless you have some sort of either carrot or stick being something like it's mandated by the government to use this system, or carrot being, I don't know, maybe giving users money or something like that. And so I don't think we've seen yet any solution that is going to fully be able to get users over the hump. So, it's a super important problem to solve, but I think we're still a little bit away from having like a finite solution to it. So we'll see.
Cool. And in a second, I want to run through the A16 crypto index, which I think is one of the best pieces of research out there, which doesn't get enough airtime. But before we do, gaming, I guess would love to maybe get some homework from you. What are some of the Web3 games I should be keeping an eye on, should be trying out, to kind of get a sense of what's possible today?
Yeah, sure. Well, a few that are live that I think are definitely worth checking out. One is Pirate Nation, which is fully on-chain, but I think within the on-chain games realm, more accessible than some of the other ones that are, I think you have to be an engineer basically in order to be able to play them. So I think Pirate Nation is in a good niche in that sense. So that would be one. I think Pixels is another that caught a lot of steam towards the end of last year. They've been building for a while, so was excited. They're not a portfolio company, but I think it's just a game that has gotten a lot of interest and an active user base. So that would be another one to check out.
Cool. Okay, so we're going to make a song, the Coinbase institutional song on Sonic, and then we can play on Pirate Nation on Pixels. I see you're the lead singer, David. You've got a massive mic, so I think that probably.
I think that sounds appropriate. Yes, very good.
Very cool. And now, so State of Crypto Index. You guys put this out. I think it was 2 years ago. Maybe you launched it. And I think you update it monthly.
Yep.
An amazing piece of work from you guys. Is there anything within that you want to highlight that you think is particularly interesting or insightful?
Yeah, so, I think basically the goal of this index is just to provide updates to the community. Anyone who wants to look, it's free and it's online. But it really reflects the forces of innovation and adoption that we see driving the market cycles as opposed to the prices of tokens. Interestingly, at the end of 2023, we saw the highest peak of the index after November 2021 and January 2022. And this was really driven by a few primary factors. Number one, an all-time high in active addresses, which are trending almost at 21 million. And that is just unique active addresses that are on all the blockchains that we're tracking, which includes things like Ethereum and Polygon, Solana, a bunch of others. And then also relatedly, we saw an all-time high in number of transactions, which is in December reached 1.9 billion. So I think that both of those metrics are really exciting because to me, they represent actual usage of the chains and the networks within the ecosystem. And what we've seen typically is that price activity will follow metrics like that. So, I think we're setting up for a very interesting 2024 in that regard.
Yeah, I 100% agree. I think they're the sort of metrics that you really want to pay attention to because, as you said, they're leading indicators versus price, which is clearly not. Arianna, that was absolutely fantastic. Thank you so much for joining us. We've got our homework, so things we've got to go and try. David, you're in New York.
I get to listen to your song.
Yeah. We'll let you know on the release date of that one. It may not be immediately, I will say, but we'll get there. I need a bit of voice coaching, I think. But David, you're in New York, so you can try out Blackbird straight away. So that will be. Let us know how you get on there. Cool. Thank you very much for joining us, Arianna. And David, talking of indicators, what is going on in the macro side of things?
Yeah. So, I guess it's kind of goes back to Davos too, because I feel like, the conversation that most people had on the macro side was concerns almost that things are too good, which is kind of a weird conversation to have. People talking about how we're in a Goldilocks environment. It seems like the economic data we've been getting, at least in the U.S., is supportive of that. Fine, some of the sentiment data itself has been on the softer side, but mostly it's been trending positive. And if anything, it seems like the idea that we can just outright avoid a recession altogether, have a soft landing, seems very real. And I think that makes people uncomfortable. Already it's materializing in the stock market. Tech stocks are doing better. Obviously, with this kind of goes in line with some of the earnings we've been getting as well. But I think it's going to be interesting because we have the Fed meeting coming up. We're in a blackout period right now. So next week we'll see whether the Fed itself kind of interprets things in the same way, and whether this means that we're not going to see rate cuts until later in the year, whether March is still in play. It seems that we are already in a pretty decent disinflationary environment, despite the fact that we got a bit of a modest surprise for December data. So, I think it's interesting to find out now, like, what's going to happen, because if indeed, we're just going to avoid a weak economic environment altogether, then, it kind of trends positively for risk. I'm not entirely sure of that, though.
Interesting. So with that sort of setup, like how do you think about the digital ecosystem in general? Like where are some of the areas that you think are maybe potentially more interesting than others?
Yeah, I mean, let's be kind of lay the groundwork first. I mean, I'm still not 100% sure that we are going to avoid a recession entirely. I think the probability is still non-zero, but certainly I think the data that we're getting seems to kind of push back against the idea that a really, rough economic environment is going to materialize. If, however, that's going to be the case, then, I think we could see a very decent setup for the rest of Q1. Now, I'm not sure if that's necessarily my base case. In fact, I would argue that it's not. But I think that, we still have to be concerned about, hey, what if a banking crisis comes back up again? We saw like CalSTRS recently say that they needed like a $30 billion cash line to kind of help offset the $52 billion, commercial real estate portfolio that they have, or at least a kind of cushion against it. So I think that we're not entirely done with the real estate issues that we've seen, or, the regional banking crises that we had in 2023. I'm still nervous, at least, that, these things could still pop back up. But overall, I think that for the time being, what we're seeing right now in crypto markets tends to be more technical. And if we, kind of get through the other side of that, that means, we hit the supply wall, for example, and, we're going to need to kind of source more Bitcoin again. I think that demand kind of goes back up. And if anything, this environment kind of lends itself very nicely to seeing a tick back in probably end of Q1, beginning of Q2.
David, so you mentioned we obviously got that, I guess, hotter December data, and now we're starting to price out some of these cuts. Do you think, and we've also seen crypto prices come in, how much of the move in crypto markets do you think was or is driven by sort of macro expectations versus just, maybe we got a little too over levered and excited about the ETF? Or maybe a different way to ask this is, how important is the macro environment as we, move towards the halvening and then into spring?
Yeah, I think that the recent price action we've seen in Bitcoin tends to be more idiosyncratic, and I don't think it's very macro driven at all, quite frankly. Some of this has to do with just the setup for these ETFs because of the way, like, we were forced into cash creations and cash redemptions compared to in-kind creations and redemptions, because that led to these authorized participants actually needing to, right, perhaps this is just more speculative, but buying some of the Bitcoin beforehand in order to hedge themselves. And maybe they were, protecting themselves by buying the Bitcoin spot, but selling the CME futures, for example, the basis. And now they're kind of going through that on an intraday basis as they're getting and receiving these these buy and sell orders. My expectation is that kind of went in line with some of the liquidation levels that George mentioned earlier, and that combination is kind of what has left us where we are. But I think that that's a very technical move. And now that we're my guess, getting to the end of that, if we look at what the open interest on these kind of positions look like, I think that there's a good chance that we can kind of recover from that pretty quickly. But it's hard to say what the timing is going to be and what the levels are that could impact us, what the floors are. But probably going forward, I would say that the setup as far as the context dependent, halving, for example, that could be pretty interesting, because my original thesis was if things actually get worse on the geopolitical scale, on the economic side of things, that could end up benefiting Bitcoin because it sits as an alternative to the traditional financial system. Can we do better if those things don't happen? I absolutely. I think that there's other secular reasons why owning Bitcoin makes sense. And, the education process as we go through the spot Bitcoin ETF and the inflows definitely will support that. But definitely it's not going to be as clear cut as it may have been in the past.
Yeah, makes sense.
Thanks, David. And flows are obviously such an important part of this. So, Greg, it's probably a good segue here for you to run us through what we're seeing on the desk and kind of ETF-related flows as well. It's obviously a lot's been changing over the last couple of weeks.
Yeah, it's been super interesting couple of weeks. So, and I got to say, I was surprised by the move lower. I thought we might have some noise, but I didn't think the sell-off or sell the news would be, as violent as it was. So, I wanted to know what kind of happened. So I started looking at some of the data. The first thing I want to talk about is just exchange volumes. And I've highlighted in green, this is spot exchange volumes in the week up to and including the launch, and actually the Friday after the launch of the ETF. And spot volumes were very, very high, as you would expect. And then as we went into the weekend and started this, or the following week and into this week, volumes have just fallen off considerably. And I think that's important just because from a liquidity standpoint, lower volumes can exacerbate any moves. And I think that's one of the things we're seeing right now. If we go to the next slide, actually, this is Bitcoin CME open interest. And Friday, the Friday after the launch, sort of towards the close, we saw basically the spot market starting to get hit very hard. And a lot of that was from CME basis traders unwinding. They were basically long spot, short futures. And they started to unwind those positions as basis collapsed, from sort of the mid-teens levels down to low single digits. Additionally, we saw just a ton of long open interest on the CME come down, that Friday and during the subsequent week. And you can see on this chart here, I've marked with the green line sort of the launch of the ETF. And right after that, we saw things fall pretty quickly. And, TradFi, everybody, and I don't want to say everybody, but it is very much of a buy the rumor, sell the news market. And I think that's what happened here. You had a lot of CTAs and, hedge funds and other speculators get long Bitcoin into this event. The event happened. Price action on the 11th was okay, but not, didn't blow the doors off. And so they quickly unwound their positions, and, we saw open interest, fall 25% through yesterday, and that certainly pressured spot. If you go to the next chart,
just on this chart, Greg, just for those listening. So on the 11th, when we launched, we had just over $6 billion of open interest on CME, and then today we're now at just over 4.5. So yeah, you plotted it perfectly. Like that, it's one way down to the right post the launch there. And is this? Can you just talk me through like what are people doing there? Like their trading basis, I assume. Do you mind just talking through the mechanics of exactly how that works?
So there's a lot of different participants. There's certainly basis traders that are long spot, short futures, and they're earning the basis, so the difference between the spot and the futures price. They don't have a directional view on the market. They just want to earn whatever, maybe they're 10, 15% annualized. But then, that basis exists because there's other players that are in the futures market that want levered long exposure to Bitcoin. And so, they bought CME futures into the ETF launch, and then they were the ones that, likely closed those positions, forced basis to compress, and then actually took the market lower. If we go to the next slide, so this is perp open interest. So you have CME futures that are generally traded by TradFi folks, and then you have perpetual futures that are generally traded by more crypto native funds. Now, again, I've marked using a green line the launch of the ETF. Now, perp open interest declined as well. But and you would expect, we had a pretty large, price decline in Bitcoin, but it didn't decline nearly as much or as fast. So when I look at both of these data points, I start thinking that really the move was driven by, TradFi speculators that had gotten long into the event, and then the event happened and the trade was over for them, and they closed their positions.
Yeah, interesting. That makes a ton of sense. So where next, I guess, is the question.
Yeah, it's a good question. So we have another slide. We're going to bring that back up. So this is what we look at every day when we come in. And for those of you that can't see this because maybe you're listening in the car, this is basically the ETF fund flows. There's a number of ETFs that launched. We all know that. So what we're looking at is the net flows that are going in or out of these ETFs on a daily and weekly basis. And, looking at this, there's over $1 billion of new money that's gone into the spot Bitcoin ETFs since they've launched. And now we had estimates that were all over the place, but $1 billion of new money is, it's a decent amount of money. And it's certainly a positive. Now there is a rotation among these funds. We're seeing, some of the higher cost, more legacy ETFs lose assets, while the newer, maybe lower cost ETFs gain assets. But the net flow is what's important here, and a positive $1 billion is pretty good in my book. And if we continue to see decent net flows, week after week, I think that'll be very positive for our market.
Yeah, 100% agree. I mean, this is always going to be a longer term game, isn't it? We weren't expecting to see a ton of huge net inflows on day one. It takes time for the wealth management platforms and RIAs to kind of think about adding this. And a number of platforms have certain barriers or prerequisites to listing new products. So yeah, certainly going to take some time, but that's not a bad start for sure. That's great, Greg. Well, thank you very much for that. Sid, wrapping up on last couple of bits on Web3, please.
Yeah, in addition to all of this, macro chat, there's also been a few developments in Web3 regarding Memecoins specifically. So this has obviously been a pretty sector-specific craze amongst many of these chains, starting with Solana, with Bonk earlier last year, and then earlier this year, the WIF dog with hat coin. What's been interesting is chains are kind of recognizing this, and teams that are developing and launching new chains are recognizing this, and actually fully owning it. So in a sense where this week we had the Avalanche Foundation put out specific criteria for its initiative that it's calling the Culture Catalyst, where they had a fund in 2022, 100 million NFT fund, and late last year, they came out and said that they would be purchasing meme coins in the Avalanche ecosystem as part of this fund. And so we've seen several meme coins on AVAX surge quite a bit as a result of this. But it's an interesting trend, especially that we're probably going to see other chains as well follow suit here, where meme coins become a form of user acquisition in terms of attention and enthusiasm for the chain. So already I'm seeing signs across the L2 space as well of incentives being given to meme coin teams. So we'll see how this develops.
Yeah, it makes a ton of sense. I guess the Solana phone's a perfect example there, isn't it? It wasn't selling, and then bonk rallied, you got an airdrop, and it sells out within 8 hours, like pretty much around the world. I guess what are some of the characteristics that we should be looking out for, or like how do you screen for a meme coin?
Pretty tough. A lot of it is genuine community-led enthusiasm for it, right? So we were talking about decentralized social earlier in the call. The Farcaster community launched a meme coin called Degen, which is on Base, where the entire community is kind of rallied around it, and folks try to come up with use cases for the meme coin after the fact. So I think really it's whenever there's an organic community forming around something, and it has a strong core of believers who will spread the gospel, so to speak, despite the coin itself having no utility. Usually the community forms a kind of mimetic value to it, and then spreads that as it grows.
Wow. Never a dull place, crypto. Always something like that going on. What else on the Web3? Anything else that you wanna touch upon before we wrap?
Nothing crazy. We're seeing a bunch of big launches of L2s lately. Last week was Manta. This week, starting in a few days, is this thing called Altlayer. A lot of these chains are dropping airdrops as well. Specifically, a lot of them going to Celestia stakers, which is an interesting trend. As little as $20 of Celestia staked could have made someone eligible for several $1,000s worth of airdrops just in the past few weeks alone. So interesting trend to monitor.
Wow, that is quite impressive. Well, thank you, Sid. Appreciate that. And thank you to the rest of the team. Thank you to Arianna for joining today. And thank you all for listening or watching. That's a wrap, and we'll see you next week.